What's up guys, welcome back to InvestingPH. Now today we will evaluate the second largest nickel producer in the Philippines, which is Global Ferronickel Holdings Incorporated or FNI. With the rising demand for nickel, let's see if it's a good investment or not. So let's start. Again, would like to remind you guys, my videos are for educational purposes only. I am not your financial advisor, so please do not use this video as basis for your investing decisions. And again, I am merely showing a glimpse of the company, so please still do your own thorough research and analysis of the company. And before we start, would really appreciate it if you click the like button, and if you haven't yet subscribed, now is the time to do so. With that, who is Global Ferronickel Holdings Incorporated or FNI? Established on May 3, 1994 as a holding company, it was formerly known as Southeast Asia Cement Holding Incorporated. It then changed its name to what it's called now in September of 2014. The company and its subsidiaries engages in the exploration, mining, and exporting of nickel ores. It owns interest in the Cagdiano mine with an area covering 4,376 hectares. The company's subsidiaries are the following. So in all of their subsidiaries, they mostly have 99% ownership of it, especially in their mining. The exemption is their steel manufacturing business, which is FSC, and also in their real estate holdings. Now, investing in mining, of course, we know that the resources is not infinite, so the company continuously explore areas. In the picture here, we can see where they conducted their test drilling. The areas with marking are labeled in different colors for the corresponding years they have been explored. In total, this is from 2015 to 2020. And this is the recent, which is their 2020 test. With this, the results from these tests are as follow. With a quantity of 23,186,000 tons, 1.1% of it is nickel and 30.65% is iron. And this is their total statement of mineral resources. This is as of October 15, 2020. There's still a lot of unmined areas for them. Now, this is also one thing to take note on in investing in mining companies. Of course, you have to know how much resources are still there to mine. With this, they still have a lot of unmined areas. The group's proven probable ore reserves are at 59.45 million wet metric tons with an average grade of 1.14% nickel and 30.50% iron. This was in December of 2020. So for me, it's really important to take note on as well their exploration datas, since with that you have a glimpse on how this company would do in the future. Now, nickel has rise up in demand these past few years. This is the graph of the price of nickel from 2013 up to 2021. I'm showing you this because this will have a big effect in the company's revenue later. I would show you the correlation of it since of course the company's main business is nickel, and we can see in the graph this year it's really rising. Now, as we know, when demand increases, price goes up. Now, one reason for this is because of the booming demand for electric vehicles. Now, Nickel Asia's client is China, which is their biggest. That's why the company intends to strengthen more their sales in China. So what's in China? China is now the leading electric vehicle manufacturer in the world. And what does EV needs in their batteries? Nickel. This is the forecast of FNI for China's EV sale for 7 years, a compounded annual growth of 30.5%. If you think about it, this forecast has a lot of evidence backing it up. With the popularity of EV, and a lot of countries are now embracing this technological advancement. So this is one thing to take note on. Although the downside to it is, what if they invented a better battery that doesn't use nickel in it? Although there are already batteries that doesn't use it, but it doesn't match up to the capabilities of nickel. With that, let's go to their financials. Again, I would still be following my checklist in evaluating this company. To further understand each line of it, I suggest you also watch my other stock analysis videos and might as well watch some educational videos I posted along with it, link in the description below. First, let's go to their income statement. Now, with what I showed a while ago, nickel prices goes up and down throughout the years. Well, we can see the effect of that in their income statement. Let's look at the revenue first. We can see in 2014, their income really went up high. If you look at the price of nickel in that time, it also went up as well. With this, we can really see the correlation to it. If we look at their latest 12-month, their revenue also went up. Well, since demand for nickel went up as well this 2021, its price went up higher compared to its 2014 level. Going to their net income, almost same story to their revenue, although they still haven't yet matched up to their 2014 level. Still, they have an annual compounded growth rate of 13%, which is quite high. If you look at their net income margin, we can see it really fluctuates throughout the years. 2014 was the highest. This shows us why it was the highest in their net earnings, getting 54% net profits from their revenue. With this, it's actually a check for me, since even though it fluctuates throughout the years, it's given since nickel prices also fluctuates from time to time during those years, but they are still doing good even with that, and the trend of their revenue is in line with that, and their compounded annual growth for net income is at 13%, which is quite high. So you should be comparing their income statement to their competitor as well to see how they are handling the fluctuation in this line of business. So I would also be doing a stock analysis for Nickel Asia in the future, which is their competitor and the largest in our country, since it's much better to show you guys a graph instead of their averages, since it also fluctuates like this. So it's your assignment to look on that one if you want to further analyze this company. Moving on to their equity growth, well, we can see their income fluctuated rapidly in the past years. When nickel prices went down, we can assume their equity didn't much grow in those years. Looking at it, as we expected in 2015 to 2018, their equity growth didn't really move and had a slight negative growth, but in 2019 and 2020, a good growth. This offsets those stagnant years, making their compounded average in these 5 years by 6.84%. By the way, I'm only showing 2015 to 2020 since app.ticker only has these datas. Anyway, their latest 12-month is still in the negative growth, but I didn't count that as of now, since there are still a few months to go for 2021. With that, it's still quite a good growth for their industry, even if you compared it to their competitor, which had a lower growth rate than them in the same year. So it's not a typical type of growth that we get compared to the companies in different industry, but they are doing good for their line of business. Moving on to their ROE. Their 5-year ROE average is 14.5%, so quite high. Comparing it to Nickel Asia has only 8.3%, so a check for me. Now, ROE is important to see how well management is using equity capital in producing net profits. But again, be careful in looking at ROE, for it can be raised with a huge amount of debt. So this is why we check it with our next valuation, which is the debt-to-equity ratio. They have a debt-to-equity ratio of 0.49. This is for their latest 12 months, really low. Comparing it to their competitor, Nickel Asia has 0.38, which is low as well. So what I want here is for debt-to-equity ratio to be below 2. Another check. Moving on to their cash flow statements, what I look at here is their FCF growth rate. What I want to see is for this to be in the positive trend. Now, even though their business fluctuates quite a bit, they still maintain their FCF in the positive. Ever since 2013, they had a positive FCF. Although there are some fluctuations, this is still a check for me. Again, I'm very lenient in my checklist now since their business is like this. Commodity prices tend to go up and down. This is their business cycle, and what I want to see here is even though it fluctuates, how is their financial statement reacting to it? Are they losing money from those cycles? Though it fluctuates, they were never in the negative zone. That's why for each industry, it's really different how you look at it. If you are expecting to see a straight positive growth rate from this kind of industry, and looking at the price of the commodity they are selling is fluctuating, then there's something weird happening now in the financials of the company if that happens. How did they magically do that if that's the case? So this is one thing to take note on if you want to invest in these companies. That's why really compare how their business is doing to its competitors. Moving on to their long-term debt. So the company doesn't have any long-term debt, which is a huge check for me. So with the positive free cash on hand plus no long-term debt, really great. So if you look at their competitor, same, really low, only 0.12, which means they can pay their long-term debt in just under a year or in a snap using their free cash on hand. Next, let's see if they're also handling their short-term obligations well or their short-term debt. This is the current ratio. With this, they have a current ratio of 2.27. This means they have 2.27 peso of current assets for every 1 peso of current liabilities. Now, the standard for this ratio is between 1 to 2. Since too high of a current ratio doesn't always mean a good thing. But in this case, we can see their growth is in well between their industry and their cash flow is good. Equity is growing in line with their income. So this means their assets are put into good use. So another check for me. Wow, it's all checks so far. Moving on to their PE ratio. They have a 6.46 price to earnings ratio. This means you are willing to pay 6.46 peso to earn 1 peso. Another check since what I want here is for this to be below 15. Now for their dividends, they have a yield of 4.38%. Now 2021 is the only year they have paid dividends so far, so we don't know if they would continue this yield in the future, since dividends are in line with their profits. And of course, not every company that earns pays out their dividends, since some companies reinvest it again in their company instead of just paying it out as dividends. So we still don't know about that since we only have 1 year worth of data. Now for the company's moat or their competitive advantage, since they are only the second largest in nickel business, I can't say they have a good stronghold in this one, but what I can see is their strong financials, very well handled debt, and even with the fluctuations along the years, their growth is somewhat stable. So financial wise, that's one of their strengths as a company. And one thing to take note on is nickel is getting higher in demand because of the rise of electric vehicles. Though they are second in their business, they are still a large producer, and the Philippines is one of the top producer of nickel in the world. So for a moat, the strength I see in them is their financials and the high demand in nickel. So in such a fluctuating commodity in the past years, I want a company that has strong financials and a well-handled debt, wherein they pass that one. Check out every line in my list. Anyway, these are my own thoughts for the company. Though size-wise, they are only second to Nickel Asia. For the company leader, their chairman of the board is Joseph C. Now he has a long-standing experience in nickel and commodity trading and has developed a trusted relationship in their customers in China, which is something to look for since their sales are mostly in China. And he also handles a lot of company, mostly subsidiaries of them. He is also the mining director at Philippine Chamber of Commerce and Industry and a founding member of Philippine Nickel Industry Association. So with that, I think he really has a lot of experience in the nickel mining business, and how the company is doing financially is another thing to look at on how well they are managing this company. Lastly, is it within my buy below price? My computed intrinsic value for them is 4.22. With a 30% margin of safety, my buy below price is 2.95. Now I use a more conservative growth rate because like what we've seen a while ago, their industry is really fluctuating. It depends on the price of nickel in the market. That's why I was a bit conservative. Now, if you look at the chart of FNI, you may notice the sudden drop of their share price. This is because of their stock split ratio of 1:3, wherein they increased the number of shares for the company. Though prices went down, the company's value is still the same. This is usually done to give more liquidity because sometimes a lower share price is much attractive than a higher share price. But anyway, I don't really care about these things. That's why for me, stock splits are just for appearance. And of course, if you buy companies at lower shares, this will benefit you. So I just follow the 8K rule when buying stocks. Moving on, so FNI scored 12 out of 12 in my checklist. Now just to make things clear, I correlated their earnings and growth to the fluctuations of nickel and how their company reacted to it. That's how I analyze this company, not like in my analysis of other industries where I want a constant growth in their financials because their financials are correlated with the price of nickel. They have a very well handled debt, and again, I use conservative growth projections for me to have a larger margin of safety for this kinds of business. Now the key note here for me is the high demand of nickel, especially right now that electric vehicles is booming. So that's one thing I'm also looking at for this company. But even with that, I still use a conservative growth projections for myself since we still don't know what will happen in the future. So might as well be more conservative in your projections. With that, this ends my video for today. If I miss out on some key datas, do comment down below for everyone to see. Again, do your own research for the company. This is just a quick preview of the company. You have to do your thorough research on your own. The goal of my video is for the sake of introduction. So if you like the company, then do a thorough analysis. It's funny to ask for more in YouTube videos because in investing, you yourself is the sole analyst for your investing decisions, not some YouTube videos. Everything you get online are just add-ons to your own analysis. Use the company's website. Use their annual reports. It's all there for you. Don't just rely on some analyst projections or some YouTuber or even in my own videos for your decision making. Do your own research. Anyway, I hope you liked the video. So if you have gone this far and you still haven't clicked that like button, would really appreciate it if you do so. And if you aren't subscribed yet, do click that subscribe button as well. So again, thank you and see you in the next video.